Amid Q3 results season, Adani Group stocks were trading over 7% higher on Monday, 29th of January. The group was also reportedly in talks with a clutch of global private equity firms and local banks to raise about $3 billion over the next few months. This money is likely to be used to expedite the upcoming mega projects that the conglomerate is working on. Clearly, Gautam Adani means business. He has once again overtaken Mukesh Ambani to become Asia's richest man. But the Indian business tycoon and his empire are still trying to overcome the shock delivered over a year ago by a 106-page report of US short seller Hindenburg Research. It had accused the Adani Group of being involved in stock manipulation and circumvention of regulations, among other things. Adani had trashed all the allegations, saying the report was targeted misinformation aimed to damage the group's reputation by vested interests. But over a year on, 7 out of 10 stocks of Adani Group are still trading below the levels seen a year ago. As on January 5, 2024, Adani Ports and Special Economic Zone was up about 50%, Adani Power had soared 89%, Ambuja Cements was up by 6%. But Adani Total Gas was still trading 74% below from year ago level. Adani Energy Solutions and Adani Wilmar were down 62% and 39%. Adani Enterprises was trading 15% below last year's price. Adani Green Energy, NDTV and ACC were also trading below compared to last year. In contrast, the country's benchmark indices, BSE and NSE, have soared about 20% in 2023. The total market value of all 10 Adani stocks was 19.2 trillion rupees before the Hindenburg storm hit it. Over a year on, as on 25th of January, it is about 14.53 trillion rupees, which is still down about 4.67 trillion rupees. Meanwhile, markets regulator SEBI is still probing the case. The Supreme Court had on 3rd of January refused to transfer the matter to a special investigating team, saying there is no regulatory failure on SEBI's part. A 3-judge bench observed that SEBI was conducting a comprehensive investigation and its conduct inspired confidence. SEBI has completed probe into 22 out of 24 investigations, and its report is still under the wraps. The verdict in a way signaled that there will be no additional regulatory risk to the group beyond the SEBI probe. The top court also said there was no need for it to order any changes in the country's disclosure norms for offshore funds. Latching on to the court order, Gautam Adani said that truth has prevailed and the group's contribution to India's growth story will continue. But why are some Adani holdings still struggling to attain the pre-Hindenburg glory? Manu Rishi Gupta of MRG Capital tells us.
The sectors which in any case had a lot of tailwind from the market perspective, like the Adani Power and the ports and India's burgeoning economy, rapidly growing economy, provided a tailwind to these two companies. And unfortunately, the Total Gas Energy Solutions and Wilmar have struggled to regain their old prices, primarily because these are very, very capital intensive industries, sectors. And one of the things that Adani might want to do would be to somehow get its FPO, the follow-on public issue, through. And that would instill a lot of confidence.
Regardless of some skepticism, the Adani Group is leaving no stone unturned in improving its financial and operational performance. Experts agree the group has been making strategic investments to further its growth and expansion. Its revenues continue to grow, helping it reduce debt and meet financial obligations. The group has brought down its net debt to 2.5 times its annual earnings, compared with 3.3 times before the Hindenburg report. Ramesh Vaidyanathan of corporate law firm BTG Advaya tells more.
So I would say all of these investments are fairly well thought out. And I would even go to the extent, Kasturi, of saying that this setback for Adani has actually been a blessing in disguise. I think it has helped them clean up some of their internal workings and also be more transparent in the way they deal with stakeholders.
The Adani Group has in fact unveiled plans to raise more funds through the issuance of bonds. According to data compiled by Bloomberg, as of 19th January, 13 of Adani Group's $15 denominated bonds were above 80 cents on the dollar, a level generally considered as the cutoff for a bond being distressed. Majority were trading higher than the levels touched last year after the report. Last month, rating agencies ICRA and India Ratings had assigned AA+ ratings to the bond issuances of Adani Ports, citing the company's strong business profile. According to industry observers, what stands out in Adani Group's case is that despite high debt concerns, investors continue to have a sanguine outlook for the group's future because of its huge investments in infrastructure.
If your businesses are aligned with the growth sectors of the Indian economy, you just can't go wrong unless someone deliberately sabotages your prospects. Most of the group's assets broadly fall in the infra space, and with India's economy expected to grow at a faster pace over the next few years to become the third largest economy by 2030, the group's businesses should do extremely well. Whether the valuations would be justifiable or not is a different question, but there is no doubt about the prospects for this group.
So, what is the investor sentiment going to be like for the group going forward?
At some level, they also realized the importance of communicating with the stakeholders. I think they had not done that mostly, and I think they seem to have probably got that part of the story right. They've got some very reputed investors on board. They've managed to, clean up some of the debt part of their books. So I would say overall, they've done reasonably well. But if you ask me whether they are completely in the clear and whether investors will blindly trust them moving forward, I think it'll take some more time.
The Hindenburg report definitely was a big lesson to corporations, underscoring the importance of maintaining transparency, which Gautam Adani himself acknowledged in a media report, contending that he's under no illusion that this is the end of such attacks. Experts contend that it will take some more time for the group to completely recover from the aftershocks of the report and win back investor confidence.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.